Hey, what's up guys, welcome to another video. In this video, I'm going to be discussing my 2026 strategy as of now. Okay, so I formulated a strategy uh, regarding diversification and buying the dip, which is very contrary to what I've done in 2024 and 2025. But, just to explain what I did, I went pretty heavy into HIMS and hood in 2025 particularly, and that did very well. But I sold out, if I'm not wrong, was nearing the end of November, and went into BMNR with all my capital, and that went as well as this chart right now. So I went in to BMNR at 60, and that absolutely did not work. Okay, so that's why I am pivoting my strategy a little bit into more of a less risky. Now, what I'm doing is still very risky. I'm going to explain the strategy, but just keep in mind this is my own personal strategy. You should not follow it, and I am not exactly your financial advisor, so don't ask me any questions because I can't, answer it. Okay. Um, so these are sort of the stocks that I have right now in my other portfolio, which I'm starting. I'm working on transferring my BMNR position from Webull to IBKR, but here are my current positions. I'm going to go through them a little bit. Um, so the cost basis and the market value is very low because I'm funding this entirely with my paychecks and not from previous capital. Um, so, I'm going to go through them one by one, I guess. So, the first thing is NVIDIA. NVIDIA is still going to be important in 2026. Now, they're not going to have, I think, the same monstrous growth we saw in 2025. Okay, I'm looking at simply EPS here. They had a 650% growth in 2025 Q1, and 2025 Q3 they had 1,000% growth. Okay, this is not what's going to happen in 26 and 27. The time is a little weird here. They don't report based on uh the year. Okay, um, but they are still going to keep growing, and my you know sort of target on Nvidia is not really like a wild target like 300. Okay, I mainly bring in the technicals on this one, and technicals is going to be a huge part of this strategy. So I'm looking at the weekly chart here, and it's going to be a longer time frame strategy. Okay, it's going to be like a 1 day, 2 day, 1 week time frame. I'm not really going to pay attention to the smaller time frames anymore because, in my opinion, there's going to be a lot of news in 2026 that is going to cause a lot of market turbulence and market crashes. Okay, not market crashes, but individual stock crashes. Okay, that's why I'm focusing on buying the dip. And for one instance, just to before I get to it, is the credit card loans being set to 10%. And that's going to affect a lot of financials. But there is a lot of people saying that that might not even go through. Okay, I'm going to explain it a little bit. Um, but I think Nvidia is still going to be important in 2026. There's still a bunch of LLMs that still need training. um, China just opened up. Now, hopefully, Taiwan doesn't get invaded. Um, and I think robotics is going to be very important for Nvidia as well. I think there's going to be a new growth driver, but robotics is probably not going to be as big as LLMs. Um, so I think Nvidia will still be important in 2026, and a lot of money will still flow into it. I guess the bet here is that OpenAI and Anthropic IPOs, and they get a lot of capital from the market. And initially they might say that they put that money into Nvidia, and that might cause Nvidia to go up. Now that is severe speculation, so don't take my word for it. That's just my guess. And when all that liquidity gets sucked out by OpenAI and Anthropic, that will cause some problems in the market. And in my opinion, based on my last video, right, in Q3 or Q4 at this point, there might be a market crash because of low liquidity. Um, And my play here is not for another crazy price target like 300. I think I might get it at 220, 250. Um, when the 1 week MACD goes back up, the 1 month doesn't look very good, but I'm looking at the 1 week, and I'm basing off the fundamentals and what's going to be happening in 2026. There's going to be midterms. We don't know if Trump is going to win, and if he doesn't win, I can't really predict the outcome. So there's going to be a lot of turbulence. So Nvidia might not work out. Okay, that's why I am focusing on diversification. I have a position in Netflix. So Netflix, the position here is that I think they're gonna get Warner Brothers. Now they might not even secure the deal this year. Um, so that's up for debates. And the other thing is that I don't think people are necessarily going to cancel, or even if people cancel, part of Netflix's strategy is to make people cancel. So that's why maybe Stranger Things was bad. Now I didn't watch it. I don't personally have a Netflix subscription, but I know a lot of people subscribe to Netflix, and as I get a little bit older, I do enjoy watching shows more. But I watch shows mostly on Amazon Prime, right? But at some point, uh, I think I might run out of shows on Amazon Prime, and I might subscribe to Netflix. We'll see if Netflix goes up. Maybe I'll use some of that capital to put it in Netflix. Um, but once again, I'm looking at the technicals here. The 1 week specifically, RSI, near the bottom, stochastic RSI, near the bottom. So these are two different RSIs. The stochastic RSI gives me like a second signal. The normal RSI is more of a broad trend, and the stochastic RSI gives me a few more buy signals. Now, I don't really buy the stochastic when it's below this 20 range. That's not a rule that I have. I'm mostly using the main RSI. Uh, I'll probably explain it better at some point. And then we have the super trend. It's a new indicator that I'm sort of picking up, and also linear regression. So remember when I used to draw these consolidation lines? Well, it's going to be done automatically for me now. Okay. I can't even find it anymore. Oh, there you go. So I used to draw parallel channels, right? And right here we have a linear regression line. So this is based on math and not based on what I use, which was my own visual. So I'm making my strategy less subjective and making it more objective based on TA, right? So you can see that I think in a lot of these charts that I've put money into, there's very very little drawings. I used to draw a lot of support and resistance lines on the smaller time frames, and that worked for a while. But uh, you know, I don't think it's gonna work in 2026. Okay. Um, Next up, we have Oracle. So you'll notice with a lot of these positions that the stocks have been down a lot. Okay, and what I think happens when the stock is down is that a lot of the risk is priced in. That's why I feel more comfortable buying. Uh, and the hard part is holding it through the times when nobody wants to hold it, right? So there's a lot of fun with Oracle right now with the funding. They are issuing out a lot of bonds, and they are risking a lot of the company. Okay, but in my opinion, I think what Oracle does have is that they do have scale. Compared to a lot of these new hyperscalers like Nebius and what is it, Tempest or something. Now, I'm not throwing shade at Nebius and Tempest. I don't know much about the company, but I do know Oracle has been a long time player in the cloud space, and they're spending a lot of money to build data centers, which will take a long time. But I think aside from that stupid Paramount trying to get Warner Brothers deal. I think Oracle is still going to be a large player in the cloud space. And there's some stuff to be said about them not being as profitable and not having as good of margin as the big three, right? Microsoft, Google, and Amazon. Okay, so Oracle, I've looked it up. Is worse than all three of them in terms of their cloud. But I think based on the price, right, you're not going to get the same price as those hyperscalers. Well, they are outperforming Oracle, so maybe that's not really important, but that's not my strategy. Um, and I gotta stop getting sidetracked here, but I think Oracle is going to have at least a reversion to the mean. So that would be, currently about, 246 at least. I don't know how long it will take. It might take the next 2 years. Um, or it could continue to go down. And if it continues to go down, then I'll have to consider whether I can pick it up. So this strategy, because it's so diversified, I can choose in the future not to continue to invest in these companies if I see fit, right? Because I have a lot of different options. And the plan isn't even to keep these forever. Okay, I have a separate portfolio for that. I'm gonna call it a coffee can portfolio. Um, but that is more ambitious, and I will have to figure out how I'm gonna do that in the near future. Um, so that is Oracle. I don't think I did a good job explaining. At some point, I will do a better job. Okay. Next up, we have ARM. Okay, so ARM. Um, what's surprising about ARM is that most of the chips right now are based on ARM architecture. And part of the play I have here is also on robotics because ARM chips are very, very power efficient, and they are not, I guess, they're not really used in inference, but um, I think a lot of robotics are still going to have to use ARM chips because ARM chips are very good in low latency control compared to x86, and it's also more power efficient. I think a lot of the robots are going to have to use ARM chips, but the market doesn't want to price it in. And you know, aside from that, a lot of the new, for example, like TVs or something, still use ARM chips. Every Apple device use like an ARM chip, if I'm not wrong. Um, so I think ARM chip, it's not undervalued, but once again, the risk is priced in. So you know, one more thing, I'm not just trying to diversify in terms of price. I'm also going to try to diversify across time. So it's not that I don't want positions in Amazon or Microsoft, or Microsoft does look good, but I don't really want Microsoft. Meta, does look good as well, but it's not that I don't want these positions. It's just that now is not really a good time to buy them. Uh, you know, so I'm going to wait for a more opportune time to buy them. But it's not that I don't want to buy them. It's just that I think some of these other stocks are better in terms of opportunity, in terms of buying the dip. Now, these stocks can continue to dip further, especially with HIMS, because I saw the HIMS at 56. I looked this up. That was actually probably a lucky sell, but I immediately put that into BMNR, which it didn't work out. So maybe it didn't matter. Um, but I think most of the risk with HIMS is also priced in. Now, I think they can continue to go down further because the healthcare sector right now is very, very competitive. So once again, I don't know if HIMS is going to work out, but if I don't see it working out in the future, then I can not DCA into HIMS, and then if it requires more time, I can put it in the coffee can portfolio. I think that's how I'm gonna figure that out. So my coffee can portfolio right now is this. So it's a 10 to 20 year hold. Okay, so it's very, very ambitious. I think it's going to be one of those portfolios where I just throw in stocks that don't work, and mostly just try to forget about them. So HIMS is one of those. If it doesn't work, then I'll just give it like another 10 years. Um, was getting very ambitious. Yeah, I'm it's probably very hard to hold stock for 10 years, but if the position is small enough, um, it probably won't be that hard, right? And the next one is Hood. So prediction markets got a huge hit recently, and part of the reason why I sold Robinhood was because I think their international expansion is going to hit their margins. And I saw one of the C-suite executives on Amit's stream talking about expansion, and Robinhood's strategy for expansion is to, if I'm getting this correctly and I'm sort of paraphrasing, is to wait for a market crash, and when a lot of retail investors either get very interested, or when markets crash, people tend to actually dislike their broker. And I don't have the facts here, but that's just arbitrary. um and that's where Robinhood swoops in and tries to collect customers, because it's easier to pick up brokerage customers when um the rest of the other brokerages are losing customers. um so that's their strategy in picking up. So that's part of the reason why their global expansion is so slow, because we haven't seen a massive market crash yet, not like 2008. So I looked at IBKR, which is the broker I'm looking into, and when there was a market crash in 2008, okay, they took this time to, sorry, it wasn't 2008. If I'm not wrong, it was 2008. They took this time to expand, and they went into a lot of different markets by buying different brokers and giving better prices. And once they did that, they had basically a global presence. So if I'm not wrong, okay, Robinhood is likely going to use the same strategy to expand, but is going to take a hit. Their margins are going to take a severe hit, because it's expensive to expand. You have to deal with a lot of regulatory issues. For example, right now in Singapore, uh, I really don't think prediction markets are going to make it, because we have a very anti gambling scam stance. The point with our anti gambling is that if the government is not making money off the gambling, then it's not allowed, right? So they're gonna have to deal with a lot of this difference in regulations, and what they are able to do, and it's going to incur a lot of cost for Robinhood, for particularly their global expansion. So that's why I sold. Uh, why am I buying it up right now? I still think they are a broker that a lot of people want, and I think their strategy for expansion is going to work. Now, obviously, their gross margins are going to take a hit, um, and I think it's going to take some time for them to get back to where they are right now. So I'm buying this in small uh, amounts. Okay. I also think it's entirely possible, by the way, in 5 years for Robinhood to not even be competitive anymore. That is one huge problem I have with Robinhood, but we'll see how they are able to compete. I think Vlad is great, by the way. It's just that their slow global expansion does piss me off a little bit, but I understand why they're doing it. And then I have BTBT. Okay, so this is another Ethereum play. I guess I didn't learn my lesson from BMNR. But BTBT, I think I've listened to some of what they are. If I'm not wrong, he's the CEO. Um, some of what they said, and they own this thing called white fiber. I don't know if this is going to work. That's why it's a very small position. I have what, $90 in BTBT. So it's just another diversification play that's at a good price, and that is part of my strategy in 2026. So I'm not sure if this strategy will work out. Highly discourage you guys from following me into this strategy. I think there's a lot of risk to what I'm doing, particularly not following the trend here. But if we see a market rotation, particularly in Q3 or Q4, out of AI, one thing I think it could rotate into is first off Ethereum, because Ethereum is you know it's part of uh the monetary system, but it's not necessarily related to compute. So it doesn't need the AI chips to run Ethereum. And then for BMNR itself, it's going to have that staking yield, and hopefully, Tom Lee knows what to do with the shares. I don't know what's going to happen with the shares. I personally, I'm not voting because I don't want to go through the trouble of voting, especially because I'm international, and I'm not even gonna go through that. I'm not gonna waste my time with voting. Um, I don't know how the vote is gonna go through. The vote, a lot of institutions have jumped into BMNR, so maybe at least 25% of institutions maybe they will vote yes, but I think institutions are gonna have a very very large weighting in the votes because I don't think retail is participating or I don't think at least like 50% of retail is probably not going to participate in the votes. um and we're just going to have to wait for Ethereum to play out. So I think it's possible for a lot of that AI money, if there is a crash, to rotate into Ethereum, because when OpenAI and Anthropic IPOs and all the insiders sell, it doesn't make sense for the AI insiders to put that money back into AI. And the size of these IPOs are in the trillions. Okay, so this money could move into crypto, which is something that is actually pretty fairly valued if you value Ethereum off its total value locked, and if tokenization of real world assets keeps going, ETH might be a good place to rotate to. That's why I'm in BMNR. But the structure of BMNR has to uh, make sense. Tom Lee has to navigate this very, very hard job of making sure that all the investors are okay with what they're doing. And, I- they can't continue to dilute, I don't think, because they're not getting the same liquidity that they were in the past. And that's a huge problem, okay? I think Tom Lee will have to find a way to navigate that. He hired a lot of people. You know, the Oliver Howe crowd. Hopefully they will help him. Okay. Um, that is BMNR, and yeah. So I think that's it for this video. Thanks for watching. Let's subscribe and see you next one.